Well, g'day there traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me on this Thursday pre-market update. It has been a little bit of a turbulent beginning to this abbreviated week's worth of trade. On Tuesday, collectively across the board, we were left with that of a bearish piercing pattern, especially on that of the S&P and also the Nasdaq. Pay attention to this pattern. It is a very early reversal signal and it does show up towards the end of bullish movements. Now, this has been a tremendously profitable rally over the past number of months. It really has moved into a very parabolic type of state. It was looking as though, again, as at the close on Tuesday, that we could be potentially moving into a little bit of a slowdown. However, fast forward to yesterday's session, the Dow Jones Industrial Average closing up 322 points. All of the losses that we established during Tuesday's session worth of trade were made back plus more as at the close on Wednesday. So it looks as though, once again, these markets still have a little bit of fuel in the gas tank, so to speak. An area that I have made very well known to people in pro and also publicly on this YouTube channel is as shows on the Dow Jones Industrial Average. This is essentially that of a decelerating fan line that was once support. Let me just bring up my cursor tool so you can see this for yourself. It is this red line moving from left to right on my screen. It is a little bit complicated or sort of messy to actually show you where this begins from and why it is so important. We have intersected and touched and bounced and acted or pushed against this as resistance a number of times since the bull market inception at the beginning of 2009. What essentially this is at the moment is that this is going to act as new resistance when we come back up and begin touching it or tagging it. So on my screen at the moment, this is all, of course, it's dependent largely on time moving forward, but roughly 26,300, give or take a couple points, right, or a couple hundred of points, given that the Dow Jones Industrial Average is valued where it currently stands, being just over 26,000. So you can see on my screen 26,309. I firmly believe that when the Dow Jones Industrial Average tags this, hits this, we should see some form of a larger slowdown. A slowdown which actually didn't, of course, really substantiate further, at least beyond that of Tuesday's session, where it looked as though potentially we were going to do so. So please pay attention to that and keep that in mind. At the moment, we're closing at 26,115. If we just round that up, we're looking at roughly 200 points, which is less than what we did yesterday during Wednesday's session of trade. So really marginal upside in my own personal opinion. What we've been doing this week is really liquidating and rolling out of a lot of individual trades that we've been priced into, triggered into over the past number of weeks, if not months. So what I'll do for the remainder of this video is just recap our top 12 list and give you updates as I see fit as we go through the list. Now I'll begin with Apple. Apple on Tuesday, once again, we saw what is deemed to be that of almost a bearish engulfing pattern. Now, we do have an upper wick, which once again is indicating that selling sort of pressure taking place on Apple. But even during yesterday's session, we closed up another $2.91. All of the losses, so to speak, or almost even the entirety of that upper wick was really sort of negated, and we did have a very strong close as at Wednesday. Now, the problem with Apple at this time is that I'm not in it, and I assume that everyone in pro is not in Apple. The reason for that is because of this vertical line just here. We have earnings coming up on Apple. This has been an absolutely blockbuster sort of trade setup. You cannot fault this trade setup. It is incredible in the world of a technical analyst or through the eyes of a technical analyst. However, the one problem that we have as analysts is that of earnings. We have to more or less liquidate all of our positions or individual positions depending on that earnings announcement per company prior to, of course, that earnings announcement. We never want to hold positions over earnings. The reason for that is because it is largely unexpected as to which direction the actual report is going to be interpreted by investors and also, of course, traders alike. So if you're in Apple, I firmly like the trade setup. However, for me, I never want to be backed into a corner in the world of analysis and to be forced to act because of course, this earnings announcement, which is scheduled for the 1st of February 2018, of course. So Apple's a decent trade. It ticks all of the boxes for a very nice breakout. The ADX is turning up, which is fantastic. We also have the CCI, which is now definitively broke above that positive 100 reading. This is on the back, of course, of a bullish engulfing candlestick pattern, which set up on Wednesday, and overall a pretty decent consolidation, which has been under construction for about 2.5 months. and just a really nice sort of breakout, of course, as well, taking off from those exponential moving averages, which are now confirmed given that price has broken above the swing high of the channel consolidation. So a little bittersweet there on Apple, but it goes without saying, if you have rules and principles, it's best to follow them when you have to make tough decisions in the world of trading. Let's move into Amazon. Amazon is more or less unchanged for the past 2 days worth of trade. We closed down $10 today. We had a nice gap up on Tuesday, but much like the market, it was sold throughout the day, and it was one of those candlesticks which is telling us caution, caution, caution. We're still in this trade. We still have our stop placed at 1,273, a very profitable trade from 1,206. At the moment, though, I'd leave my stop where it is. There is a chance, of course, that we do get stopped out if the markets pull back during Thursday's session. But if we see the markets continue, we're still going to be in this, and we should see again those profits continue to develop. One of the stocks which really hasn't slowed down all that much is Boeing Airlines. Boeing Airlines during yesterday's session up another $15.85. What we can do now is actually adjust this stop up to the low of Wednesday's candle, 335.80. So again, we need to liquidate this in about 2 weeks' time, but if it continues to run, fantastic. If you want, you can always take some profits off the table. More or less where we closed at Wednesday, it was another phenomenal day, $15 of intrinsic value being built into the structure of those call options, which originated down here at 301.66. So I'm very happy and pleased to report about Boeing Airlines because we're all sharing in, of course, this really monumental rise, which is still continuing with Boeing Airlines. We've got Baidu as well. Baidu has been oscillating from support down here. We started getting interested in this at 238, then 242. We've had another 2 entries at these current levels, 255 and 258. We have recognized, of course, that we do have a gap, which is now filled definitively, or it even filled last week. However, when we fill what have once been open windows, you have to allow for some turbulence, and that is exactly what we're seeing in Baidu. We closed down $2.30. I'm not concerned about these 2 candlesticks. Yes, the upper wick isn't the best. However, I still believe that the market itself, the Dow Jones Industrial Average, which I'm using as the mantelpiece for the NASDAQ and also the S&P, it still has a little bit further to go until we really need to tighten up a lot of these stops on these profitable trades. So let me just move into Caterpillar. Again, we got stopped out of this trade definitively. And when I say stopped out, it's not stopped out for a loss. We were in this, as low as 140, 143. This is most recently going back to late 2017. You can look on the left-hand side of my screen. These are past triggers as well. I had a stop for myself at 158.39. I liquidated the entire position here, but other people have actually held on to this as the price has continued. We moved our stop up to the low of Friday's candle. We were triggered out of this on Tuesday at 168.95, I think definitively. And this is coinciding, of course, with this earnings announcement, which is scheduled for really next week, Thursday, it looks like. So pretty decent timing there. I'm assuming everyone is out of Caterpillar for some really tremendous returns if you entered into, of course, any of those core contracts that we spoke about over the past number of months on Caterpillar. Now, COP is another trade that we may have placed the trigger, or at least the stop a little too tight, but at the same time, I'm happy to be out of this, or at least happy for you to be out of this at the above level, 59.12. You can see on the screen we closed at 59.86. Earnings is around the corner at the beginning of February. A little profit here. Not the most profitable trade when we compare it to, say, for instance, Caterpillar, even Boeing Airlines. But having said that, it is a pretty decent trade setup from 55.98, which is over here towards the end of December. So a very small profit compared to other stocks, but still a pretty decent little trade there as well. Again, CVX stopped out for another profit, 131.98. We tagged this on Tuesday. We definitively, moved below it on Wednesday. Past triggers 120, 121, 122, 126. You can see all of these green lines on my screen, things we go through each and every week in Pro. But a lovely trade setup that has run its course. I'm very happy again that we have been triggered out of this stock. Really not enough at this time to update you on. It is going to be one of those stocks that we need to, allow to rest, breathe a little bit, consolidate in its own right as it moves into earnings. And then, of course, we'll come back and look at some of these gap trades, which I believe are going to set the tone again for the next quarter moving forward. Now, the narrative is quite similar across the board. The markets on Tuesday, just to reiterate, they really had that first candlestick that ushered in a little bit of caution, or at least that of a short-term warning. It is an early reversal signal. In the world of candlesticks, or at least understanding and interpreting the psychology and sentiment of candlesticks, it's very important because collectively you should see this when you look outside or more individually outside of the actual indices. So if you start seeing, say for instance, bearish counterattacks or dark cloud covers or bearish piercing patterns, which is the case, most commonly at this particular time, you should also start to see these candlesticks with the individual stocks, and that's exactly what we're seeing. So again, it looks as though a lot of these stocks that we follow are moving into that sort of last gasp to the upside until naturally and ultimately we have to move into a consolidation. Now, Google is still looking quite strong. 1,088 and also 1,070 have been the most recent bullish breakouts. We do have a stop placed at 1,102. What I can say at this time is that we may be setting up bull flag continuations, and if that is the case, hopefully we can ride this a little bit higher prior to liquidating once again for earnings at the beginning of February also. Now, another stock that we've been speaking about is Goldman Sachs. Goldman Sachs we had to, liquidate last week at 256, if not on Tuesday. Now, if you liquidated it on Tuesday, it would have been more ideal than that of Friday last week. All in all, it was rather immaterial. Today, however, we've seen a very large, outside day Morobozu candlestick, almost a flash crash. We moved from 260 down to about 246, so a massive downward move in Goldman Sachs, and again this is coming on large volume as well, so we have to pay attention to this. It's not a trade that I'm looking to short immediately, nor should you. We do have this sort of DNA of that of a double top, but at the same time we're still trending to the upside. If I bring up these exponential moving averages, you can note that Goldman Sachs simply tagged that 50 exponential moving average, and if this is going to be that of a reversal, which at this point is still a little bit tentative, what will generally happen is that you will get the definitive break of the 50 and then you'll get the retest, and the pivot's going to come in at about 251. So the benefit of the doubt is still to the bullish direction, or with the bulls I should say, but at the same time post earnings announcement we have a very large outside day bearish Morobozu candlestick on elevated volume as well. So think about this, not something to act on as for Thursday's session, but definitely something that I will update you on in more detail over the weekend in that pro class. Now, we saw a gap on IBM yesterday to the upside, a very bullish sort of signal, a continuation to the upside. What we have on IBM at this time is a potential gap and go trade. We do have another open window. This looks like another continuation gap. It may turn out to be that of an exhaustion gap. It is too early to tell. What we do know is that the markets do have a little bit more gas in the tank again, just to say, but at the same time, generally these windows will close. And if we can hold and stabilize around that open window, well then that is the opportunity given the current market environment to actually jump into this trade. However, if you want to jump into this, I'll tell you where your next target is. You can put a trigger more or less above the high of yesterday's candle. I'm going to make this a dash line simply because I don't want to risk it at this point, or risk really much of my capital account at the moment, which is again tremendously expanded with some of these trades we've been in since late 2017 and into the beginning of 2018. The reason for this is because the market is stretched. I think we can all agree on that. And as I've already alluded to, my target, and this is just a personal target for me, I'm only speaking on behalf of myself, is alerting me to the simple fact that if that trend line or that decelerating fan line is going to act as resistance on the Dow Jones Industrial Average, as I bring it up, we're only looking at about another 200 points to the upside. It's obviously going to hinder some of the bullish advancements of these individual stocks as well. I'd rather allow the industrial average to reset, to allow the oscillators to reset, to allow the ADX to turn down, and of course to allow the CCI to move back down from above that positive 100 reading. It doesn't have to happen, but generally that's what we will see, and that will coincide with IBM closing the gap, and then we should have a pretty decent trade from 165 up to about 173. You can see on my screen 173.20 or 172.56, give or take at this particular point, but that's the nucleus anyway. There's no reason to be looking to short IBM. Again, another gap up, a pretty decent trade there, and the market's again still overwhelmingly bullish at this particular point. There's no reason to speak about that of a large imminent sort of reversal which is taking place. I believe it's going to be that of a slowdown just at higher levels, about 200 points from where the industrial average is trading at the moment. Now again with Netflix we got stopped out 215.61, another profitable trade from 199.87. Very happy with this, extremely happy with this. I think I actually messed up personally my stop in the class at 215.61, but I think I typed it in personally at 216.61 because I got my my order ticket in via email anyway. That's how my brokerage actually alerts me. I don't follow the markets, so I'm not looking at the markets every second of the day. But I was out about and received my Netflix confirmation to say that the trade had been closed at a price actually above 216.61. So if you're still in this, it is a fantastic trade. I'd keep it at 215.61. You might be stopped out today. It's going to be another profitable trade. We're looking at about $15, maybe $16 if you get hit at this close price here. At the same time, it looks as though we are potentially setting up that of a bull flag. However, we have earnings, which is scheduled. This is really only, I mean, it's Monday next week. So you've only got really today being Thursday and Friday to actually liquidate the trade. So I will say, if Netflix gaps or moves to the upside, I'd be looking to close this trade and be done with it as well. I wouldn't be looking to overplay my hand on that particular trade. Now, the final stock that I will speak about this week is Tesla. Tesla, I believe, is going to slow down right at this level. It's looking like we're on the precipice of a major breakout to the upside. It may happen, but I would not be chasing this trade. What it looks to be sort of happening right now is we're back testing this pivot, and what may happen, and this is sort of what my hunch is telling me, is that we're going to produce a candlestick just like this. So pay attention to that of a shooting star, and if we see a major reversal take place on Tesla at this pivot and we close below this one candlestick just here, this long day Morobozu, hold on, because Tesla is going to fall off a cliff. All right, so this picture right here can change very quickly. It's very bullish at the moment, I will say that, but at the same time, if we see a sudden shift in sentiment, if we see a very clear rejection at this resistance pivot, well, then the bottom is going to fall out of Tesla if we break below 314.97. I would not be chasing this to the upside, all right? And I'll speak more about that over the weekend in that pro analysis class. So on that note, everybody, I'd like to thank you for your attention and your time. I hope this has helped you. If you have any questions, please email me, success@pivotpoint-trading.com. Until next time, stay safe, be well, and trade intelligently at this particular point, because again, a lot of people are letting their emotions get the better of them. Now is not the time, just to sum up, to be jumping into a bunch of new trades. Now is the time to be taking those trades off the table and to be realizing a lot of those unrealized gains up until this point, and then of course to go out and spend a portion of those profits on your loved ones, on yourself, do something with it, and to realize, of course, why we actually trade the financial markets. Okay, so on that note, everybody, enjoy your evening, enjoy your day, I should say, and I'll be back with you again in due course. All the best. It's James signing off on behalf of Pivot Point Trading. Farewell.